the diminishing returns of cycles, it should cut both ways. I agree with that. I have noticed that crypto's corrections have been getting longer, but more shallow. This correction here, for example, this is one of the worst. This is probably the worst correction. The Q1 correction that we had in 25 was probably the worst in the whole bull market. I don't think it cracked 30%. Let's see. No, it did. It's almost not quite though. No, well, okay. So if you let's use closes just to stay consistent. I always measure these on daily closes, and it's not even, so it's slightly under 30%. All right. So these 30% corrections used to be super common. They used to take 80-day cycle corrections used to be anywhere between 20 and 30%. Now the 320-day cycle corrections are less than 30%. So we're already seeing this. There's some evidence here that the rallies are getting more shallow, but so are the sell-offs. So I don't think if this bull market has ended, Bitcoin's not going to go anywhere near 20,000. I don't think so. Maybe 50. That would be my guess. Just a guess, because I think at 50,000, Bitcoin's market cap is $1 trillion. There's so many corporate buying programs and the ETF and all this Wall Street money flowing to Bitcoin. Plus, we have bankrupt governments, permanent deficits. M2 is growing. Like they're throwing tons of liquidity at the world. So I would call this, even if this is a 4-year cycle high, the duration of the correction is usually 12 months. Okay, so the duration of the down phase of a 4-year cycle is 12 months. I would expect that to continue. I would expect it to be 12 months. But during those 12 months, I would expect Bitcoin to go down to maybe 50,000. Yeah, maybe retest the low here. I don't think it's going to be anywhere near as severe. Yeah, that's a very good point. It's not going to be anywhere near as bad because the rally was not anywhere near as good. And usually it cuts both ways. Now, I will say I was expecting the same thing last time because the bull market was also last bull market. We also saw diminishing returns, and Bitcoin didn't go up nearly as much as it used to, or at least it did in 2017. It went down a little less though, but not a lot less. It went down like, let's measure it here. So the last bear market was, let's see, Bitcoin went down, okay, less than 80%, 77, let's call it just under 80%. But in the one in 2017, it was almost the same. It was like, you see, it's 83%, almost the same. And yet in this bull market, Bitcoin started at like, I think it was 3. We need to use a log chart because we can't even see. And it started, this is the bear market low, started at 154, and it went up 12,000%. In the previous bull market, Bitcoin was up like 20x. So I think it's 20,000%. 2,000%. So 12,000% down to 2,000%. The bear markets are about the same, 80% in both cases. Now, this bull market, assuming it ended in August, yeah, I think it went up 600%, like not even 10x. Yeah, it's 700%. It's so much less than we used to see in Bitcoin that yeah, I don't think it's gonna go to 25,000. Like 25,000 is all the way down here. Can you imagine? I mean, that would be a pretty bearish pattern because at that point you can probably draw a 4-year VTL and Bitcoin would be crossing below that. That would almost negate the idea that Bitcoin is in a secular uptrend due to all the money printing. Would almost get me to question that. So yeah, I don't think it's gonna happen. So it will go down. 25,000 is basically the 320-day cycle low from 2023. I think in a bear market scenario, Bitcoin would bottom out at the bear market at the 320-day cycle low from 2024. That would be my guess, and it would take months to get it down there. This is the reason I'm more convinced about this as opposed to the last cycle is because even though the last cycle was super strong, it was weaker than before, but it was still pretty. I mean, 2,000% return. That's pretty good. That's 20x. Even so, the corrections back then they were pretty brutal. We had this mid-cycle pause. This 320-day cycle correction took prices down 54%. We also have the COVID crash. it also took prices down 50%, 51%. And we have this entire second half of 2019 into early 2020 correction. That one took prices down even more. Prices went down 62%. So in the last bull market, the last 4-year cycle, we saw these corrections being quite brutal. They would take longer than before, but they were quite severe, 50%, 60%. In this bull market, no, nowhere close. It's 30% is the most horrible it can get. And that's a 320-day cycle correction. So in a bear market, yeah, 50, 60% maybe if things get really bad, but not more than that.